Hello and welcome to Trading with Technical Indicators. My name is James Boyd. We welcome you here today. Hopefully you had a great weekend. And this week in Salt Lake City, it's supposed to be over 80 degrees multiple days in a row. So my gosh, next week I could have a suntan or a sunburn since I'm Irish. A little fun there. We got Rachel Dash with us in the chat. Many of you saw her at the Atlanta workshop. We welcome her. And just real quick, as we're getting started, we'd like to welcome all of you. We got Will with us. We got Robin with us. Michael. Saw your questions and I'm going to note those. So we're going to hop right in. Hello, Dean, Life in the Fast Lane, Richard, and Olga. Okay. Great to have you here. So let's go ahead and hop right in. Now, remember, Rachel, myself, and all of us instructors, we do post educational content and announcements on X. So, for example, if you go right to this page, which I'll send out, you could go to Rachel's page right on X. I'll put that right in the chat. That way you can click on it and just follow. Also, for example, if you also go to, let's say, this page, my page, where I actually post throughout the day and throughout the week, etc., you can also see that there and just kind of give you an idea of what we post. Just scroll down and kind of look at the top. So as I'm watching the markets in the morning, etc., Rachel and myself are early morning risers on Monday. So we post kind of some of the things that we're seeing there and just kind of talk about them. So just real quick, also remember that this class it's a ongoing weekly class. So we have a playlist. And that playlist is, you're going to see that last week we talked about investing principles over short term. And I wanted to add the word volatility there, but I couldn't add another word. Over short-term volatility. And we've seen kind of a classic example of that. You get one up day in the market at all, you're almost right back to where we were a week ago. So it's very important to kind of say, what are the investing principles? And understand that not everything's going to be showing a buy signal or a setup signal at once. And I said last week, and I'll say it again, that really this market is a stock picker's market. We've had some questions on finding stocks, so I want to jump to that. Also remember that if you have not subscribed to the Trader Talks channel right on YouTube, it's free. Okay, all you got to do is just go to this page. If you have not subscribed, right in the middle of it, just click subscribe. With that, let's go ahead and hop right in. Now remember, with what we discuss, the information I talk about is done for general informational purposes only. This class talks about stocks, but it also talks about options. So there's different types of options. Understand that options are not suitable for all investors. When we talk about examples, we will do those on the Paper Money software application. And also when we talk about investing involves risk, including loss of principal. So we're going to hop right in and take a quick look at the market. When I say market, I'm talking about the indexes. We'll look at sectors just real quick and also kind of talk about the big four. The big four we've actually talked about is crude oil, volatility, US dollar, and rates. You watch those four charts, that's pretty much going to tell you probably what the market in general is doing. And we'll pull those up. So first off, let's go here and just pull up. So the question was asked about finding stocks, okay? So you're going to see on the left-hand side, I just have a list of futures. I'm not saying we're trading futures, but when we wake up in the morning, some of us are in Oahu, some of us are in New York City, some of us are over in Spain, for crying out loud. Futures really give us an idea. If the market were to open approximately now, what's happening with equity markets, commodities, currencies, rates, and so on. That can then maybe translate to indexes, sectors, and so on. So that's why having that list is important. Now, the GF up at the very top, feeder cattle, maybe that's not applicable to you. You could take that off, okay? Family's kind of in cattle, so that's kind of important. Now, the big thing is when we talk about indexes, now that's important, okay? Now, when we take a look at the indexes, you're going to see on that left-hand side there. So I'm going to actually bring this list up. And so first thing, when we talk about indicators, we want to know where we're going to like what are we going to be likely to see? Well, if we talk about the trend column, okay, which is very important, because if we're talking about seeing bullish indicators or bearish indicators, it's really going to come back to trend, okay? So if we were to expand this, and let's open this up just real quick so we can see it. If I were to look at the trend, we got trend 5, which is priced down below the 10-period moving average, but not the 30. But that's better that actually the VIX is actually in 5. We don't want 3, okay? Boo. Now, when you look at the S&P 500, you got trend 1, price below both moving averages, so's the NASDAQ, so's the Russell, so's the Dow Jones. Now, this is why people talk about bearish positions, right? Because if we have trend one showing prices below both moving averages, you should probably see more bearish indicators, okay? Now, when you look at the one that's up a little bit, semiconductors, okay, number two, that's the opposite of 5. And then if you look at, let's say, the US dollar, it's in 3. When you look at gold, it's also in 1, which is, kind of getting pressed down by the US dollar lately. Silver's also down 1. And also, if you look at rates, we're still seeing those actually up pretty high. Now, let's show what these really look like. So number one, futures. You don't have to trade futures. Quickest indication of what's happening at that moment in time. Second, the index list. That index list, very important because we're saying, okay, we're stock investors, we're trading options. Where are the indexes? The indexes are assuming you're watching the market right at 9:30 a.m. Eastern. Now, the last list we'll actually pull up just real quick while we're on that is when we pull up sectors. This is that routine that we're actually doing, the discipline, okay? So each day we're not waking up and saying I'm looking at completely different lists. I'm going to 1, 2, 3. 1 futures, 2 indexes, 3 sectors. And after we actually do that, we go Dow, NASDAQ, S&P 100. Now, when we actually pull up, let's say, what's getting that move there, in terms of trend, just while we're on this, the trend there is actually for technology, 2. Boy, that's different, okay? That's not transports, that's technology. We also see a little 3 in utilities. We see 3 really in energy, which has not been surprising, and there goes the semiconductors. So that's my list. So you could say, James, can I borrow that list? You can have it. Not a recommendation, but they're just kind of gauges that we actually look at. Let's pull up these charts real quick, and let's hop into examples. So, the quickest way to kind of identify what on earth is going on, many people like just looking at that, and I'll send this chart out to you, so if you don't have it, this right here is not looking at Hakanashi candles, which are interesting candles, by the way. This is looking at your just classic trend chart. I sent it in the chat. So if we look at this chart, which is looking at a standard 30-period moving average, a simple moving average, and a 10-day exponential moving average, what you'll notice is price is below both. So it should tell us in this case, trend 1. Now, this is why we make the comment down here at the bottom over and over and over again. If the price is below the 10-period moving average, the blue line, what's the prediction? Prediction, pain. Can anyone name that movie? Name that movie. I can't respond. Verify. What's the prediction? Pain. Okay, so when that price is below the 10-period moving average, you're getting the red color candlesticks signifying the price is below the 10 and the 30. If the price is down below the 10, prediction pain, which probably means more selling pressure. And right now, the Dow Jones can't fight its way out of a paper bag. You're not reading the chart wrong. The chart is showing you exactly what's happening, which is those sellers, well, they're just smashing the price down. Now, when you actually take a look at, let's say, the S&P, how different is it? The S&P, if we look at that, price down below both moving averages, and we get red color candles. Still selling pressure, okay? Now, remember, if you see the S&P or the Dow in this condition, you could see some bullish positions. But if the index, SPX, is going down, that means you're looking at a minority of stocks that are going up, not the majority. If the index was flat to up, you would have probably the average or above average chances of finding bullish positions. It's not you. It's not the search. It's not the scan. It's the market condition. So we're understanding the indicators here and what it's telling us. Price down below both moving averages, probably going to be seeing more bearish examples than bullish. Could be looking at bullish, but there's going to be less of them. Now, if we actually pull up the NASDAQ just real quick, and I want to see if there's any questions on this. When we look at the NASDAQ, now remember, why is the color of the candle changing? It's based upon where the price is in relationship to the moving averages. Why did it go light green? Price got above the 10. Why did it go dark green? Price got above both moving averages. We've seen a couple times where we've tried to go up on the NASDAQ. We couldn't really close above that dead gum 30-period moving average more than 2 days. But you're still seeing kind of that horizontal support level holding. Of the four, the NASDAQ is the strongest, okay? And if we look at the semiconductors just real quick before we go to questions, there's the kind of the pattern that we're actually seeing on the chart. What type of pattern are we talking about? You see any type of pattern? Anything? Now, if we take a look at this, what do you notice, right? We have red, okay? We see the MACD down to its lowest point, right? See the price? Well, that's not down as low as it was before. Compared to this, I'll just label 2, I'll label 1. 2 is higher than 1, and we're also seeing 2 really being higher than 1. And so we kind of have your classic tilted up W pattern. Now remember, you get a classic tilted up W pattern, that just means you're probably going to see diagonal breakouts. That probably means that you could be getting trend 2. That could be where you start to get moving average crossovers. All the above. You get the price above the 30-period moving average, you get trend 3s again, okay? So that's kind of what the investor is now understanding, kind of with what the price is doing, what are the indicators likely going to show? We're seeing in this case a tilted up W. It's not unimaginable to think there's probably a bullish divergence. People start putting up bullish positions in general, or doing buy stop orders to try to see if they can't go up and get filled. Now, are there any questions? Now, comment came in from James L561. What do the cows say? MU, MU, moo. All right, well, I don't know if you're talking about MU itself or moo for cows, but let's go to just real quick, MU, okay? Now, when we talk, why we bring this up, I mean, I don't want to think that we're talking about something. If I go to MU, you think, well, wait, what does that have to do with what we're talking about? We're talking about semiconductors, okay? Now, remember, if you're not as familiar, and it's okay, go to MarketWatch, visualize. Of course, if we're talking about, let's say, semiconductors, if I go to MarketWatch, visualize, I'll just use example given S&P 500. Well, obviously, here's the tech space, and you're now going to see there's really the semiconductor area right there. Now, if we open this up a little bit, click on that little caret, expands it. We go down to information technology. There it is. We can kind of zoom in on it. And if I just want to click on the caret again and say, give me that dadgum semiconductor. What do we got here? Semiconductor, there we are. Didn't even have to run a search. Just had to click on the button, okay? Now, let's kind of go to this just real quick. Now, James L., was that a question on MU or are you talking about cows? Okay, now, if we go to, for example, MU, let's talk about this, okay? When you look at MU, this is one of the few, let's kind of go back to just a couple days ago, right? So remember, when the prices pull back, if you say I'm not very comfortable in looking at diagonal resistance lines, you miss the whole point of the breakouts, okay? Now remember, when the price falls, you get lower lows and lower highs. The lower low really creates diagonal support, but it's down diagonal support. And if you look at the resistance, that resistance is really created from lower highs. Those lower highs tend to be right near the downward trending shorter term moving average. Example given for us, the blue line, the 10-day exponential. Now, if the price can start to get above that, those that have been bearish, they might start to look to exit. They cover their short positions. Those who are looking to go bullish, they might say, my gosh, I've been waiting to get in. And all of a sudden they say, wow, price has now gotten above the moving average. Maybe now I'm going to start to get in. Well, how does the investor know to get in? Well, the first time we actually start to see some bullishness, it'd be good if we went from a deeper pullback, which is red color candles. At the minimum, we start to see that light green. Light green because we're above a moving average, not both. Some investors, they actually might say, look, I'm going to get in on that day. Now, the biggest thing is if I say, no, I want to see more confirmation, they might say, I want that darker green color candle. I'm waiting for more confirmation. So here we're just looking at the color of the candles. Let's go back to this first chart for just a second. and take this in context or parallel it with the whole moving averages. What does it look like on the whole moving averages? Now, the date that we're looking at is the 10th, and the date that we're looking at is the 11th. I want to go back to that first chart, and let's just kind of say, what does it look like on the 10th? So if we kind of said the day that we got on the trend color candlesticks, light green, we really had the shorter term moving average that went green. Makes sense? Bullish movement, that's the first sign of bullishness, right? Now I want to go back for just a second, okay? Sometimes when we get that bullish movement, could you have a bullish candlestick that could be the precursor? Yes. So what type of bullish candlesticks are you talking about? In this order of importance. Number one, bullish engulfing. Give it to me. 2, piercing line. 3, hammer time. 4, inverted hammer. In that order. Rank from strongest to strong. Okay. Inverted hammer, not as strong as really bullish engulfing. Piercing line, not as strong as bullish engulfing, right? And then really hammer, strong, but it's not a piercing line. Okay. So the biggest thing is if we went back a day, you're going to see that was really the bullish engulfing candle. One of the strongest type of candles we can get when we're starting to go from a sell-off to where we're pushing back to the upside. That was pretty much the day when we started to turn, and you're going to see the very next day, there's 310. What did 311 look like? Well, 311, if we go back to the whole moving averages, we had the cross and we had the 20-period moving average go green. Okay, so whether we looked at this chart or we looked at that, the trend color candlesticks showing the same thing. Okay, now let's go to kind of where we are today. Now, this is always the question. Are we too late? Is there opportunity potentially now? Well, let's go to this just real quick, and I want to kind of pull this up. Now, coming up, I think this week, let's go back to this real quick. We got earnings coming up on the 18th, okay? Now, again, we know that if the investor is going to be, let's say, taking a bullish position, all bullish positions are not equal. They take a different amount of capital with them. Some have a built-in max gain. Some have a built-in max loss. Some, for example, take a different amount of capital. I said that, but I really wanted to say in this case, some have a different directional exposure, okay, or higher delta. Some are more sensitive to time and volatility. So all bullish positions are not the same. Now, if we take a look at this, with earnings coming up, if we were to say we're going to do a position on this, what type of strategy would you be thinking? What type of strategy would you be thinking? Now, as I'm actually getting an answer back on this, since we have earnings coming up, I'm just going to kind of come back to the implied volatility. I'll put that on for just a second. Let's kind of see where it is real quick. Now, kind of true to what normally happens is, 2 to 3 days before earnings, you tend to see volatility top out. Now, this is kind of crazy we're even saying this. 4 days ago or so, 5 days ago on 3.9, it was a week ago. Last Monday, the IV was 84. The day before that, or Friday, 3.6, it was at 91, okay? Now, to put that in context, when we actually go back and kind of say, where was that? Well, we can't go back. Well, we could, but I'll just show it now. If we look at where we are right now in the range, the highest we got, which we just showed, was at 94. I'm down here. The lowest we were in the last 52 weeks was 42. Well, where are we in that range percentile-wise? We're at the 68, okay? Now, many investors, they might say, look, I'm going to try to use the volatility to try to sell something. A bullish strategy, but is trying to use the volatility to get a bigger premium, lower break even, okay? Now, what I'm going to do is if I went back to this, now the comment came in from Jessica, okay? SPV, what does that stand for? Short put vertical. Now, what I'm going to do in this case, let's bring up the paid money account. We already talked about the indicators we're seeing on the chart, but what's the trade example? I'm going to go to the trade tab. I'm now going to bring up, let's say in this case, MU. Now, if you look at MU, you're now going to see MU, moo, as James L. said. Now, if we pull this up, the thing that we pointed out last week is when you have higher VIX levels, it can lead to a lot of more stocks having higher implied volatility levels, right? Think of the stocks on the boat on the ocean of the stock market. The stock market being the SPX, the volatility of that being the VIX, the individual stock being MU, and as the waves in the market are higher on the S&P 500, you're seeing the boat, the stock, move up and down more. Now that moving up and down more does start to widen out some of these spreads, okay? So sometimes it might not always make sense to consider an option strategy. If we did, we got to say, what is the pro and con of doing this right now? Wider bid-ask spread, okay? Now, what does that really do? It kind of slows down the movement in the market, or trying to. Now, what I'm going to do is, on this case, is I'm going to go a little bit closer to the bottom of the range. When we talk about selling something, we talk about delta 30 to 40. Well, delta 30 to 40 would be the 420 strike. If the investor sells the 420 strike, that's the obligation to buy the shares at the 420. Now, here's the deal. Wonder if it doesn't go the intended direction. Well, that's what the purpose of buying the put below is. Now, if we did, let's say, a $10 wide spread, okay, now notice there you got 75 cents on the 420, and you got about 40 cents really on the 410. So we want to make sure that we're getting the middle price. The 420, selling that, wanting the stock to stay above that, buying the 410. So you can think of this as buying the shares at 420, selling the shares at 410. Well, if you did that, just basic math would be $10. However, you received a credit. And so it's $10 strike with difference minus the credit. So that's going to give us what we call the maximum loss. And the price moved on us. That's why it's different. Max loss being now 640, maximum profit being the credit, 630. Obligated to buy those shares potentially from now to expiration at 420, irregardless if it's in the money, and you're now going to see the break even. Now, if we said in this portfolio I could risk, let's say $750, we could only do one contract. So what we're going to do is notice the commission as well. Trade number one here, we're going to do in this case the short put vertical, trying to use the volatility. Now, it's not a bad idea to kind of play a little scenario game. So in other words, if I were to, let's say, go to, let's say, this column right here, go to volume, go to option theoreticals and Greeks, and this would not be a bad idea to kind of play with the numbers a little bit. Now, this is not helpful when they announce earnings in the after hours. Those prices would have moved. So the numbers you're going to do in the after hours of the pre-market, et cetera, it's not going to show right because it's already factoring in the stock movement after hours or before hours. So this is kind of a tool that you're saying, hey, if the stock went up, time went by, et cetera, what would that option price be? So if we went to Theo Price, you could say, look, I want to run a scenario of what I think the stock could do. But let's say the stock goes down. But let's say volatility goes down too. What happens with the option price? And if you type in those scenarios, you're going to see that Theo Price is going to kind of be showing that. Now, you could do this on a single option or a vertical, okay? So that's something to actually look at. You could also bring up on the risk profile. So that is one that's gotten a little bit of a push. Now, if we brought up, for example, the comment came, what are those columns in your bid-ask column? The letters in the bid, so we got the bid and the ask. What you're now going to see is if I click on that, it's going to really show, in this case, where are those prices coming from? There's not one exchange, one central location per se. There's the NYSE, there's the NSDQ, the ARCA, different Philadelphia, things like that. And you're going to see that it's taking the different marketplaces, taking the highest bid, and then the lowest ask. Okay, so it's not having the investor look through all the different exchanges. It's automatically doing that. Highest bid, okay, is your seller, and the lowest ask because the investor is the buyer. Okay, that's what those letters are showing. All right, now, just real quick, Okay, I want to see if there's any other questions. Yeah, now the comment came in is, hey, that market maker move on that was 37. Yeah. So this kind of gives us a forecast, or the forecast from the market maker. What do they think the stock will do? Now, notice it doesn't just say plus 20, plus 37. It's plus and minus 37, up or down. Now, it's a forecast. Doesn't mean it's going to happen. But you just got to understand that might influence what strikes that you pick to try to handle that type of forecasted volatility. Now, I want to also go back to something just real quick. If we say, I want to go back to one that you guys and gals made mention of last week. And why did someone bring it up? Okay. Well, let's kind of go back to something for just a second. Okay. So last week in the comments, hey, someone said, hey, let's take a quick peek at Dell. Okay, let's do it. Well, this week, let's go back to that for just a second. Now, on the right-hand side, can anyone tell me what type of candle, not plural, well, you could say plural because the last two kind of look similar. What type of candle do we get on the right-hand side? Any takers on that? What type of candle? Now, remember, I said in order of importance, bullish engulfing, piercing line, hammer, inverted hammer. Now, the last two candles on the right-hand side, it doesn't matter if it's a red color candle or green color candle. Those are two hammers, okay? Now, if you go forward, now, does that say that it's going to go up the very next day? No. It's just saying that the price fell down, but someone bought it and pushed it back up. Now, someone, like being a person, could be. Could it be a computer? Could be. Could it also be institutions that are trying to build a position? Could be. Could it be all of them? Yes. Now, if you go down, you got a green bullish engulfing, a hammer. That's where the price is closing higher than we open. This one right here being the price closed lower than where we open, hence a red color candle. Okay, now if you said which color would you like? Of course, a green one. Okay, but it doesn't have to be. Now, if you look at this right here, if we talk about indicators, when might be a time to get in? Well, sometimes now remember what we said before is that you can get bullish candlesticks prior to maybe the moving average going green or CAHOLD. Example given. Well, we get a hammer, we get another hammer, and then all of a sudden we get a bullish engulfing. That's an indicator. Now that bullish engulfing, this indicator of close above the high of the low day is just saying that, hey, we closed above the highest, most recent red candle. Now this shouldn't be that hard because there's only one of them. Okay? We closed above the lowest, most recent red candle. Well, there's only one red candle, so we'll circle it. Did we close above that high? Yes. Since we closed above that high, we get a CAHOLD. Now, so far on the chart, we actually saw two hammers. Then we saw it close above the high of the low day. What do you think is going to maybe happen? Well, I mean, what do we think is going to probably happen? Wouldn't be a real shocker, okay, that 10-period moving average probably went green. Now, let's watch and see. Now, if we take a look at this, what happens? The very next day, price opens up. The open is pretty much the low, and that low is sitting right on the moving average. Now, for many investors, they like to see that. Why? Because they probably set their stops below there. They could. Now, the very next day, that moving average goes green. So now you have 10-period moving average green and the 20. All right. So notice that transformation, right? Candle, CAHOLD, and then you actually see the moving average, which is lagging. Remember, the candle is looking at that moment in time, that day. The CAHOLD is looking at that day. And why does that moving average come last? Because it's not looking at just that day. It's over a period of 10 days. It lags. It's trying to be the confirmation. So could someone have actually bought on the hammer day? Yes. Could someone have actually bought on the CAHOLD day? Yes. Those are earlier entries. Someone who's actually waiting for that moving average to turn, they're wanting more confirmation. Type in the chat that you get that. Okay? Now we got to understand here that not everyone is going to be getting in at the same time. If you get a bullish trend, there should be multiple entry signals in that upward trend. Okay? Just kind of like dating, right? He or she will probably give you multiple signals that they like you. At least you hope so. Oh, it could be the flip, that they don't like me, which that has happened before. Okay, I'll just throw myself out there. Now, if we take a look at this, we're now going to go down and say, what now? Well, now what do we see? The price actually goes down, pushes down, and then bounces back up. Now, notice someone bought near the area of the moving average. Now, does everyone use the whole moving average? Nah, that whole moving average is weighted. And so someone could have used the moving average as slightly slower, and that wick could have been maybe at a 10-day exponential. But this whole moving average is going to track the price of the stock more closely. And here's what we have on the right-hand side. So what do we got now? Here we are in 316. Someone says, look, I'm looking for a little strength here, okay? Well, we had a little run up in the price, a little pullback. Now, that pullback kind of looks like a flag. And if we look at, let's say, that little support area, maybe 143.65, and also the second area that we actually see in this case is, if I put my cursor right on it, 150.60. Now, if we went back and said, well, let's push this back a little bit so I can kind of see where's the prior high. Well, if we look at the prior highs on this chart, you're going to see that we have what? 1, 2, 3 touches right around 168. Okay, now some people will say, well, I'm going to get in when we get above that. Do you really mean that? Why can't the investor try to play up to those tops? What's wrong with that, right? So when we talk about trading technical indicators, it doesn't have to be like for the next 3 months. The investor might say, look, I had a candle, I had a CAHOLD, I had the moving average go green. I've had multiple signals here, but let's say the investor said, look, I want to try to get in now, shorter term, with the idea that it might try to go up to that old high, the triple top area. Now that triple top area is right around 166.50, okay? 166.50. Now wait, is this an option or a stock trade? Well, if we right-clicked on the charts and buy custom OCO order, well, this is going to be a stock trade. Stock. There's no expiration to strike. Stock trade. And since we bought and sold right off the chart or trying to do that, that's a stock trade. So I got a target there. I got a stop. Now, this area, if I said, where are we going to set the stop? So I'm going to kind of play the role of being an investor that says, I like to set my stops tight and using a short-term moving average. Well, if we said, where is that shorter term moving average? Well, it's 150.60, less 2%. And now what you're going to see in this case, 147.58. 147.58, that does not guarantee that it's going to sell at that. That's saying it's triggered to sell at that level. Now, if we go dated GTC, okay, target, triple tops, 147.58. It's really setting the stop underneath that moving average. And now we got to come back to really the amount of capital. Now, if we said in this portfolio, how many shares can we buy and so on, if we did 10% of this portfolio value, we're really talking about $4,000 worth of stock. $4,000 worth of stock is 25 shares of stock. It doesn't sound like a whole lot, but if the stock moves up 10 points here, 10 points down, even 10 shares could be a couple $100 just on 25 shares of stock. Now, if we take a look and go confirm and send, there's the entry, target at that price or higher, sell if it goes to that price or lower, okay? Send the order. Now what you're going to see in this case, the stop is underneath that moving average. Now I want to kind of say one comment just real quick that I said on Thursday, Friday. With what we saw in crude oil, okay, we have to understand something. It's not just a U.S. problem, okay? What? 20% of the oil supply in the world comes through that one strait. 25% from the two straits, okay, that are over there. Now here's the deal. The longer that the prices of oil stay up, it becomes, for the most part, a world problem. Okay? Now, And I want to kind of say this because remember, we said 4 charts are going to probably tell us what is going to probably happen with the S&P 500. Oil, VIX, dollar, US dollar, okay, US dollar, and rates. And if you get those to unwind, now remember, those 4 charts, they all 4 went up pretty aggressively. When those charts go up aggressively, S&P 500 typically pushes down. Now, James, why do you always have to be the opposite side of the trade? I'm not always the opposite side of the trade. I'm just saying if you went and back tested, putting on a whole bunch of bearish trades when the VIX is where we have been in the last couple of days, that's not a high success rate. The only time that really plays out or works more likely is if you are truly in a bear market, okay? Don't think we're there yet, okay? At least percentage-wise, we're not. Now, if we pull up, I want to go back to something just real quick. One of the other ones, so before I go there, I want to see, are there any questions? Yeah, okay. So the comment was, hey, on that Dell example, the IV is still high as well. Now, let's say I get in trouble, hypothetically, that if I showed every example, an option example, someone says, well, he doesn't even trade stocks. He just does options. So it's appropriate to kind of not show the same strategy because then it comes across as like, my gosh, it's a recommendation. So now, by the way, there's some reasons why the investor would want to buy the stock. We talked about that last week. But the biggest actually thing is if we went back to the trade tab, if someone said, okay, what is that IV? Just so I can kind of get an idea with full understanding what you just said. The IV is 90 at the high, 32 at the low. We're at the 37th percentile. Look, it's not in the example that we pulled up before on that first example on Micron, but that IV percentile is still fair, okay? Now, I want to go back to just one other one, just on that volatility quick discussion. One of the ones that's also kind of looks very much like Micron. Now, I'm missing one. I need help here. Okay, so I'm getting older, and I got 4 kids and a dog. I mean, I got a lot going on in my mind. There's SanDisk, and what is the other one that's kind of been the twin cousin? SanDisk, and what else has been going up? What's the other one? Now, I know what it is, but I want to see if you can help me out here. SanDisk, and what was that? Oh my gosh, dadgummit, BJ nails it. Yeah, it's WDC. Now, if we look at WDC, that's the one that's lagged a little bit lower priced. And if we go back to this, and I just want to kind of beat that dead horse. Probably doesn't sound good when I say that. I love animals, so I don't literally mean that. Now, the biggest thing is when we take a look at this, on 3-6, can you explain to me what type of candle that is right there? The red candle that I'm pointing to. What type of candle? Type it in the chat. Now, remember, why is the candlesticks important? Because the candlestick is going to be the precursor to the CAHOLD dot. That candle is the precursor. The CAHOLD is showing the first signs of confirmation that there's starting to be a turn. And then you get the moving averages. So you actually get the inverted hammer. And then the very next day you get bullish engulfing. Now, up until the time we got that bullish engulfing, so you got the inverted hammer. By the end of the day, what happened? Close above the high of the low day. Okay? Candle first. Second, CAHOLD dot. And then third, okay, you get the moving average in the shorter term going green. So if someone said I buy on, let's say, a candlestick, I buy on a CAHOLD dot, etc., where the price is getting back up above, let's say, support, like a moving average, that would be the first day. That's the most aggressive. This really being earlier confirmation on 3-9. If someone says, nah, I don't get in that, I want that cross, or give me all both lines green, not yet. And if we go to the very next day, there she is. So notice actually on that breakout, that second day tends to be the high, and then you get a shorter term type of pullback, typically. How many days typically? Well, if you're holding the momentum of the price action, probably less than 3 days down, okay? Now, if you look at this, we kind of fell, red candle, 1, 2, 3. Now we're sitting right on the moving average. If those momentum investors are going to come in and buy, they're probably going to try to buy right off that level, near there. If we pull this back up, what do we got? What happens the very next day? Let me go back and say it again. Candlestick, CAHOLD dot. That CAHOLD dot, doink, moving average turns. Then if it starts to reverse back to the upside, well, you could get a cross. That was the next day. More confirmation, 20-period moving average going green. How do I know it's broken out, made a high? How do I know it's bounced and it's starting to go back up? Well, right on the chart, we should see another CAHOLD dot. That is really your higher low compared to this one, okay? So we're making a higher low. All right, now, comment was, could you share that? Okay, now, by the way, let me share that with you. Who said that? Abhi. Now, if I just sent that back to you, okay? Now, if we go to look at this chart and say, okay, what do we got here? So CAHOLD was really on Friday, which is kind of interesting considering the market was down. And then today was the gap, okay? Now, if we looked at, let's say, SanDisk, SNDK, and we could say, yeah, it's bullish. It looks very much like Micron. The difference in SanDisk is, well, there's no earnings. Now, if we actually looked at, let's say, the WDC, does that have earnings? No, okay? Now, some people like the price not as high to an extent, okay? We talk about the moving average envelopes all the time. Some might say, I like to buy something where it's maybe not broken out, maybe it's trying to break out, etc. What I'm going to do is just real quick, let's go look at I'm going to go look at now that IB percentile there, where's the IB now relative to the range? It's at the 61st percentile. 111 was the highest. We go back to the April expiration and just pull this up, that spread is wide. This is why sometimes investors say, look, I don't care if I know options inside out. That is $2 wide. That right there is $1.40 wide. That right there is 85 cents. So in the example, just real quick, of Western Dig, at least for those options we're looking at, that might be more of a stock example where the investor says, I had an idea of doing options, but I just don't like the spread. Now that condition tends to happen when the VIX is higher, okay? Now, what I'm going to do is we're going to do this very quickly, and what I'm going to do is I'm going to put a stop right underneath the short-term moving average, like where? 271, okay? 271, 70 less 2%. It's going to be 266.26. 266.26. Now, that's a dated GTC. Capital size, again, we're going to go back, no more than 10% of the capital. Got to put the dollar amount, there it is. Type in that number. There it is, about 14 shares. Target-wise, now here's the deal. When we talk about a target really might be, let's say, those prior highs. When you get, let's say, an extension, and this is classic, right? Where you had a resistance, okay? And if we pull this up, most of this resistance was right around 296. If we draw this down to where it went to, body to body, okay? Well, I mean, obviously 296 being the first target, but if we're talking about the 161 extension, you're really talking about 331. Now, we could play a little game of, I'm very, very pessimistic. I don't believe in the mathematics of that. I want to try to get something in the daggum middle of that. Well, it's going to be about, if I did that, let's just add that to it. It's going to get the middle of that, about 131-ish, 313. So it's not at that 161 extension. You're right in the middle, okay? So now, it's okay. Now, sometimes you might say, James, I normally set that target, but I just think it's less likely to go that targets if I don't really have the market helping it. Well, that's why I'm saying it. Okay, I'm cutting the targets down a little bit. And that target, we're going to put it right at 331. You could actually do that. Right click on the Fibonacci line that you drew, and you can just add that the coefficient in there. Just type in 130. Okay. Now, If I come back to this, I can go dated GTC. There we go. Okay. So what I want you to practice on is looking for those 4 types of candles: bullish engulfing, piercing line, hammer, inverted hammer. That's step 1 in the pullback. Step 2, I want you to start identifying that CAHOLD dot. If you start to see those 4 bullish candles, then the CAHOLD dot, then I want you to start watching for the moving averages changing color. You start to get that, you're starting to see those signs of reversal. Now, the fun thing about this, it doesn't matter if it's stocks, it doesn't matter if it's options or on different products. It's all the same. That's what's kind of nice about it. So I know you can remember the 4 candlesticks. I know you can actually see the CAHOLD dot because it does it for you. And I know you can see the color of the moving averages because it does it for you. The question is, can you be disciplined and actually start tracking those? Now, I'm out of my time here today. We got Cameron May actually coming up next. It's been a pleasure to be with you here today. Thank you, Rachel, and to all of you. If you have not subscribed to the Trader Talk channel, remember to do so now. Also, remember with what we discussed, it was done for example, illustrative purposes only. And also remember that this has been the webcast today of Trading with Technical Indicators, and this has been recorded. Thank you so much. Wish you a great day. Stay tuned for Cameron May coming up next. Bye-bye.